Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. We're coming to you live from Toronto at Consensus 2025 by CoinDesk. I'm here with Jose Fernandez de Ponte. He's Senior Vice President of Blockchain, Crypto, and Digital Currencies at Nasdaq-listed PayPal. We're here to discuss how digital currencies are revolutionizing commerce. It's great to have you with us, Jose. Welcome to Trade Talks. PayPal has made several announcements over the past few weeks. And how is laddering up to PayPal's stablecoin efforts and strategy, and what value does this bring to your PYUSD holders?
Yeah. So if you look at what we have been doing for the best part of the last 5 years, actually, that's the length of our crypto journey, we've always been building toward three things. First, we want more people on the PayPal and Venmo universe being able to access digital currencies easily. We are very, very aware that our main value is our platform for consumers and merchants. So we want to make sure that for 100 million accounts, that is super easy for people who want to interact with Bitcoin or ETH or other tokens to do it in our platform. So that we continue to add, we recently added Solana and Link, among other tokens, to our platform, and we'll continue to do that. The second thing that we announced is our agreement with Coinbase, where Coinbase is going to be facilitating fee-free purchases of PYUSD. And the important part there is PayPal is a fantastic platform for consumers and merchants. We really don't play on the capital markets and institutional investor space. Coinbase is a very, very good platform for institutional investors. They play less on the consumer and merchant space. By bringing this together, we are providing more options for institutions who want to trade quickly in stablecoins in capital markets. And then the third one is we have announced that we will be rewarding consumers who are holding PYUSD on PayPal and Venmo, so they will be getting a reward rate. And what we're trying to do there is we are in the stablecoin game because we think that's going to be part of the next generation of payment rails. And people are relatively aware of stablecoins, but there's still a barrier between awareness and trial. Right. So we're trying to build that consumer value proposition that will move people from awareness to trial, because the vision is hundreds of millions of folks carrying stablecoins in their wallets and being able to pay.
And I would imagine that plays into the greater payments business and strategy moving forward. What do users need to think about when using cryptocurrency for payments and commerce? Why wouldn't you just use, your regular bank account by dollar?
Yes, the reason that we have been in crypto for so long is that it's the first time probably in a generation that we see technology that can be the next generation of payment rails. If you look at the payment system that we have today, we call them wire transfers, because they used to run on telegram wires. So we're using technology that came out about 150 years ago. And we have had a ton of innovation in payments, but mostly in the user interface and in fraud prevention, but not really in the infrastructure. So the reason that we started to invest in the technology 5 years ago is we want commerce to move into this type of rails. We don't think it's going to replace traditional rails, but it's going to be a part of it. Why would users care about that? So first of all, merchants do care about that deeply because it's cheaper and it's faster, and you can get your money over weekends and outside of banking hours. Consumers in emerging markets, very clearly they want to use it because many of them, they want to buy from US merchants and they don't have an international credit card. And this is an instrument that enables them to pay cross-border even if we don't have that. Consumers in the US, consumers in Europe or the UK, in places where people have those credit cards already, the pain point is less acute. So I think that as an industry, one of the things that we're trying to do is, first, as we said, how do we move them from awareness to trial so they get used to it? And the second is, which are the use cases that really, really are way better on stable coins than on bank account or credit? For instance, micropayments, or when you're paying in a video game that you can pay by the minute, or consuming media by the minute, or you go to a blogger that you like and you want to read a blog post, but you don't want to buy a subscription, so you can pay in cents. All those things that are micropayments, machine-to-machine payments, agentic commerce. PayPal announced today that we're going to be powering agentic commerce with Perplexity. The moment that you have agents that are buying and selling from each other, you cannot give a bank account to an AI agent, but you can give them a crypto wallet with the stablecoins in it.
Yeah, which is so interesting because emerging markets actually embrace this technology relative to what you would consider more developed markets. So it's almost as if they have leapfrogged over and the rest of the world is catching up. So where do you see the greatest opportunity for crypto and stable coins as it relates to commerce? And you essentially answered that. Is the international payments? Yes. But what about B2B and B2C?
So international stablecoins are the playbook that there are so many analogies with mobile phones that you are seeing. And that playbook, we saw that in emerging markets as well. There were many countries that leapfrogged from fixed line straight into mobile phones. And they're just using that with texting and money movement like texting. So say, can I text you money with a stable coin? It's one of the things that they are doing in those markets. I do think that absolutely that it starts in those markets. To your point on cross-border, any way where there is a leg of a trade that benefits from instant settlement that is very fast and low cost will benefit from that. The volume today is crypto markets. And I think that that's very clear. Maybe 90% of the volume on stablecoins today happens on crypto markets. The emerging commerce use cases are absolutely, in terms of volume, B2B first. And I was surprised because I always thought that it was going to be a merchant in the US who's buying from an importer in Southeast Asia and is going to be using the stable coins because they can pay outside of banking hours, outside of Monday to Friday. And that definitely happens. It happens way more the other way around. It happens way more when people outside of the US who want to buy from a US merchant. And in many of these markets, it's easier to access a USD denominated stablecoin than access hard dollars. So a lot of what you're seeing is US merchants benefiting from selling outside and collecting payments in USD as opposed to sending money outside.
Right. Well, it's more stable, the money as well. So you're not worrying about currency fluctuations and
You don't worry about that, but also think about it. If you're a CFO of a company, you have complex treasury, and you make sure that you have money in your foreign subsidiaries, there is this mad rush in treasury rooms to make sure that money is where it needs to be by Friday at 5 p.m., because then you're locked for the weekend. We are seeing now companies that are using the stablecoins to settle investments because then you can close a deal over a weekend because you can wire the money in 10 minutes and it's going to be there. Not wire, you can send it on a crypto wallet. So this idea of outside of 9 to 5, Monday to Friday, interesting stuff doesn't happen Monday to Friday, 9 to 5. It happens 24/7. And this is removing one of those barriers.
I also feel the user experience as well. Once it starts to feel ubiquitous and it's part of what you do day to day, and it almost feels like a legacy platform system, that's also when it's going to pick up when you don't have to think about it as much. It gets from A to B and it gets there and it works.
Yep.
So it comes down to
And
user
adoption
experience.
takes time. And the amount of money that has gone into educating people on how to use wire transfers and credit cards, and now mobile phones with tap to pay. And we always tend to take them for granted and say it's never going to change. Well, 5 years ago, nobody was tapping their phone to pay. So if you were to tell me what happens 5 years from now, you look, there is $250 billion of stablecoins today. Some estimates from Citibank that they pushed the other day, they're saying 5 years is going to be around 1.6 trillion, I think says. And you look at that and say, do I really believe that it could do 6x or 7x in 5 years? Well, when you look back, 4 years ago, it was 30 billion. So we have seen that moving. We did 8x in 5 years. Can we do 6x in the next 5? I think that absolutely.
Of course, think about it. Who carries cash these days, right? I mean, the ATM cards really changed the way that we do banking, and then everything's done, either on the credit card or tapping the phone. To your point, we didn't even think about getting cash anymore.
And we look at that, sometimes we look at it from a perspective that if you look at the different demographics, the younger demographic is absolutely bought into it. And if you look at, to your point on emerging markets versus more developed markets, somebody used to say that the future is here, but it's not evenly distributed, right? So you're saying, oh, nobody's using stablecoins. Say, well, you just need to walk the streets of Buenos Aires or Istanbul, and in many places you will see that people are indeed using them for payments.
They certainly are. Appreciate the insight, Jose. Thanks for joining us on Trade Talks.
Thank you,
and thanks for joining me from Consensus. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.